Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody. Today guys we'll take a look at the Great British Pound because situation has changed slightly here, or maybe not quite slightly, but the overall idea that we have discussed in last week still stands the same. We would like to trade this breakout on the Brexit nasty black candles you can see on the daily chart. This gap open still stand around 136.40 area. And we would like to trade the impulse, the momentum of this candle. But to take the position based on this candle, to take the advantage of this bearish momentum, we need some attractive upward retracement that could let us to take this position. And currently, as you can see, market wasn't able even to reach the 3.8 resistance area. So it hasn't reached the major fib level. That's why today we will adjust our trading plan, because although the overall idea stands the same, so we would like to trade on this candle, but the details of how we will do this probably is needed to be adjusted. What we see currently on daily chart. On the daily chart, we see the signs of weakness. So, precisely speaking, there are three important moments. First of all, take a look that market on last week has dropped below the monthly pivot point. It tells that sentiment has shifted to the bearish side. And although the reaction on the payrolls was not really significant, but that mostly because market has been shocked by the rate cut just the day before the non-farm payrolls release. So that has led to this drop on the Great British Pound. This is the first moment. Second moment, take a look that after Brexit drop has happened, market has shifted trend to the bullish side. So, and even in the beginning of these actions was really nice upward rebound. So we thought that maybe market really will hit the 3.8 level, and that will give us the opportunity for taking the short position. Recall that we even have discussed the pattern, so you could recognize here the reverse head and shoulders pattern. We will talk about it a bit later on the 4-hour time frame chart. But here, our first idea was based on this pattern. So we thought that market maybe will form the hand shoulders that will lead the price right to this area, and that will let us opportunity to take a short position. But this hasn't happened. And here, as market action stands mostly flat, while trend is bullish nominally, it leads us to a conclusion that this could become the bearish dynamic pressure. And if this is the bearish dynamic pressure, market should take it out of these lows. As a result, that would lead us to the third moment. The third moment suggests that some pattern should appear here that would let market to drop below this area, and some targets should be hit. So we have thought on this subject on the monthly chart in the weekly research. So we have found another target that could be hit very soon, and the target of this butterfly coincides with the target on the monthly chart. It stands approximately 124.50 area. Here, this could be the butterfly. The butterfly is very suitable and comfortable pattern here because the butterfly, first, it suggests the further downward action, and second, at the same time, this pattern is a reversal one, and that is this combination that is really we would like to get. So we see the signs that market probably will show some drop, but also we are thinking about the possible retracement that should start relatively soon. And the appearing of the butterfly corresponds and matches to both of these moments. Besides, the butterfly later could shift to another one, a larger head and shoulder. So, for example, this could become the left shoulder. Head and market could form another larger head and shoulders that will lead market to further upward action, so some bit more extended retracement. All this stuff in general agrees with the larger time frame analysis that we have on the monthly chart, and in general by the fundamental moments, because we have the bearish view on the Great British Pound in the long-term perspective. But at the same time, in the short term, probably the market is really ready for some upward bounce. That's in general, in the short speaking, the idea of our view on the Great British Pound. Now, on the 4-hour time frame chart, guys, we see this head and shoulders pattern, and until it hasn't started to form the right shoulder, everything was just perfect. So you can see a very tight, small left shoulder and a head that takes the shape of the bottom line, stands precisely in 1618 extension, starting upward direction. Upward direction was really fast. And we said, well, probably we stand very close to appearing of the right shoulder. But the problems have started when the market started to form the right shoulder. Right shoulder was really, really extended. So this is not a good sign for the reversal pattern, because by the logic of the reversal pattern, when the last part of the pattern is forming, here the bulls should take the control of the market, and they should push market higher with a significant speed. But when you see the lack of this, so it just tells you what the real power of the bulls here. It's very anemic. So you can see very extended right shoulder. And last week, when the market indeed has reached the neckline, it has failed to pass through. So what we see the bottom of the right shoulder touching the neckline. Here should break out, should follow. But we do not see any of that of this kind. The market just dropped below and back to the bottom of the right shoulder. This is definitely the bearish sign. And it tells us that probably the downward breakout is significantly more probable than the upward continuation here. That's our thoughts. So this leads us to conclusion that currently, guys, it's probably better to avoid any long positions on the Great British Pound. So the long position, if you would like to really trying to take the long position, you probably could try to do this right at the bottom when the butterfly will be complete. Short position, well, for us, the major short position that we would like to take is based on this drop, and and to take the short position, we need some upward significant retracement. Until we will not get it, we can't trade this real significant drop. That's why you could try to trade this to the downside based on this butterfly. Maybe this is not a bad idea at all, but the scale of this butterfly is a bit smaller compared to the daily chart, and not quite a standard relation to our video. So we mostly try to trade the daily setups. But anyway, we think that the trading short right now is safer than the trading in long. By the patterns and the moments that we have right now on the current market. So you could try to make your own analysis on the shorter term picture. Maybe you will take a look at the 15-minute chart, the 5-minute chart. You will find something there at all, as well. But we're currently mostly interested in the final point of this pattern and to get the real upward retracement. If we will get it, we will be absolutely happy, since it will lead us to the area where we could get the strategical short position based on this drop. So our major pattern that we would like to get is some kind of the A, B, and some C point, C top for taking the short. That's what we would like to get. How situation will stand between these points, it's not really very interesting for us, but we just show you what patterns we really have, because I know that a lot of our farmers trade different time frames and the different patterns. So maybe for somebody of you this will be useful information about this butterfly and about this potential failure of these head and shoulders, because it really could bring a lot of possibilities for trading in the short-term perspective. So that's been said, on the Great British Pound, we mostly see some signs that market probably will try to drop lower and hit an area around 24.50. After that, maybe we will get the retracement that we expect to get and that we have discussed within the recent probably 2 or 3 weeks.